And on Wednesday, bonds were up 20 basis points early this morning, so 2 nice days of opening gains in a row. Stocks were down 23 points. Bonds rallied to nearly the lowest yields of the day after the Chicago PMI data, but have erased all those gains after the JOLTS job opening data came in. Trading levels are right in line with the weakest levels of the day for the treasuries. China's soft manufacturing data added to concerns about the outlook of global economic growth at a time when the central banks are still in tightening mode. Price data from Europe on Wednesday prompted traders to curb bets on ECB rate hikes, though worries remain about the region's prospects as demand from its largest trading partners falters. Chicago PMI came in at 40.4 on a 47.3 forecast. JOLTS came in, the job opening and labor turnover survey, came in at 10.1 million openings versus a 9.2 million forecast. It was 9.59 previously. While the composite debt ceiling bill is taking shape, its passage is not a done deal. Moreover, despite the heated rhetoric, the current compromise only shaves about 1.5% off of the 2024 spending, as it utterly fails to attack the budget's major cost drivers. If our politicians ever get serious about reducing the deficit, it will require tax hikes, reductions on entitlements, and cuts to defense. Until then, it's all show and tell. MBS spreads continue to remain at historically wide levels, which isn't helping mortgage rates at all. The average 30-year mortgage rate is just under 3% over the 10-year CMT. 2008 is really the only time in the 2000s that it has been near this high. Cleveland Fed President Mester spoke this morning saying that she wants to continue to hike rates to 6%, though she's had a pretty terrible track record of over the last couple of years of her predictions and things like that. She was one of the big proponents of inflation being transitory a couple of years ago. Many inflation components have been heading downward. However, the Fed is relying on old data, which is furthering the disconnect. While we can trace some of the morning's back and forth market movements, the economic data, the PMI, the JOLTS, it was the European market handoff that set the tone for today's U.S. trade rally. The only major contribution from the domestic standpoint would have been the several Fed speakers hitting about skipping the next rate hike on the upcoming meeting. At the end of the day, MBS were up 36 basis points, 10-year treasuries down 4 basis points, and stocks lost 25.69 points. At the end of the day, being up 36 basis points at 99.86. That is putting us right above this bright red Fibonacci R1 retracement line, which is putting into basically a balance of two different wide ranges. If we can hold above that tomorrow, we got some room to run up to 100.346, which is the next resistance line. Also in the news, there are only about 564,000 active listings. That's about 11,000 per state. In California, where there are 58 counties, that is on average less than 200 per county. In Wyoming, the least populated state, there are 58 counties, so that is 190 listings per county. Of course, averages don't apply like this, but it's important to keep these things into perspective. Also in the news, State Farm General Insurance Company, the provider of homeowners insurance in California, will cease accepting new applications, including all businesses and personal lines, property and casualty, effective May 27th, 2023. So they are no longer going to issue homeowners insurance in California due to the rising costs and the amount of wildfires.